So let's find out if the IPO market is back. So we are going to invite to the panel the private equity representatives, Dom Vidal, John Meeks, and we have Oleg Tscheltzoff, a serial entrepreneur. And not sure if John Lindfors is here. Oh, there he is. Please come to the podium. And of course, how could I forget? And he could have been on the previous panel because we are talking about strategic M&A, but when the program was put together, his deal wasn't yet done. Lars Hinrichs, the founder and also sponsor of this event and founder of Xing, who recently sold a majority of his shares to Borda. And then we have Simon Guild, the chairman of the well-talked about MMO gaming business, Bigpoint. And this panel is really about trying to find out why private equity is winning all these interesting deals. John has a big smile because I think he has done like 3 or 4 in the last 12 or 18 months. And also what's happening in the IPO market. As we learned from the previous panel, Europe seems to be quite thin in terms of exciting online internet public players. So John, maybe you share with us some of the very recent and time-sensitive feedback you gathered over the last days. Before we go into all these questions, I would like to ask everyone as the last panel to quickly introduce themselves so we know who we have. Simon, please start.
Hi, I'm Simon Guild. I kind of a bit of a fraud sitting here because I am not a finance guy at all. I spent 14 years at MTV Networks. I was the CEO of Europe. Nowadays, I work with a range of internet and mobile companies. I'm the chairman of Bigpoint, which you saw a bit earlier, and a range of other things that cover digital marketing, social network, a mobile company, a online video space, a cloud computing company, and 2 or 3 others I probably can't remember.
Hi, I'm Lars Hinrichs. I'm an entrepreneur and founder of Xing. Besides this, everything you want to know on me, you find on Twitter or on Xing.
Hi, good afternoon. Oops. Good afternoon, everyone. John Lindfors from Goldman Sachs. I run the technology team here in London covering Europe and also the extended parts of Europe falling under the moniker EMEA that we all frequently like to use nowadays. I've been doing it since 2004 and I also cover media in Europe for Goldman Sachs on the investment banking side, in particular focusing on new media.
I'm John Meeks from TA Associates. I'm one of 2 partners who's in charge of our European and Indian investments. TA makes large-scale investments in rapidly growing businesses. We've raised about $11 billion in the last 5 years to do recapitalizations and buyouts of growth companies.
Dom Vidal with Index Ventures on the growth capital side, partner with my friend Giuseppe. So prior to that, was running Yahoo in Europe for 3 years from 2004 to 2007, and prior to that, founded Calco.
Hello, I'm Oleg Tscheltzoff, so I'm an entrepreneur. I'm the co-founder and CEO of Fotolia.com, a leading marketplace for microstock photography. And before Fotolia, I founded Amen.fr, the 2nd largest web hosting company in France that I sold in 2004. And I'm also a quite active angel investor in Europe and a little bit all over the places.
John, let's keep the microphone in your hand for a minute. So why are you eating the lunch of the big strategic players in Europe? Why are you winning some of these deals? And some companies today already presented their businesses, namely AVG, an antivirus business out of Czech Republic, or also Fotolia, or M&M, or eDreams in Spain. Tell us, are you overpaying for these businesses, or are you just at the right time, at the right spot?
Well, I think there's a couple questions in there. I think the first question is, why aren't strategics buying? And we like entrepreneurial-led businesses that still think they've got a lot of growth ahead of them. In those the most attractive businesses tend to dominate their niches, like Fotolia dominates a small niche. So it's not important enough to one of the big generic online businesses or online media. And so there's a great place for private equity to be owners of these larger businesses. We've also, in Europe at least, we've bought 7 businesses, invested over $1 billion in the last 5 or 6 years, buying from other venture capitalists. So we think of ourselves very much as an alternative to the IPO market, as that threshold has gone higher and higher. And it's relatively less attractive to be a European tech company public than perhaps it is in the US. And so we think there's an active business there. Are we overpaying? We're definitely paying more than anybody else, or else you're not going to win the deal, right? So, you know, I think it really comes down to the situation. Are you making the right decision at the right time? You know, we closed 5 deals in September. So I think we've been a little more aggressive in this last 12-month period than others have. But right now, everybody's back in the private equity industry looking to invest money. There's a tremendous overhang, and it's a great time to raise money from private equity sponsors. So there's lots of hope for people out there. I think there's lots of secondary transactions, but to bet on the big strategic exit is very unlikely. So people are looking at earnings. You know, this is what it's all about.
Thank you.
Why don't I'll just add a couple of things, and I think that was a great reply. Obviously, the perspective that I have is more as a sell-side advisor or as a buy-side advisor, and I think that in recent deals, and I'm thinking in particular about the deals that have taken place in 2009. Obviously, deal activity has at the end of the day been pretty muted, but what we've seen in certain sort of online-related deals, be it Skype being bought by an investor consortium or Hellman and Friedman buying WebRes, I think what is clear is that private equity is also much more flexible in terms of actually getting the deal done. They're quicker, very quick decision-making times. In a number of situations, you have huge companies that need to go, you know, up the flagpole to the main board. You know, the main board has different views about things. So it goes down back to the deal team that need to renegotiate a few critical aspects, and by that time, private equity has just leapt ahead in negotiations. So obviously, you can't generalize. It's always highly situation specific. But in a number of instances recently, we've just seen private equity players be much more nimble than strategics.
Despite there are no debt markets.
Well, yeah, there was a time when you could, you know, buy a company for $1 billion and borrow 700 million of it. So the fund would have 5% of its capital at risk. You know, for some strategic, they don't get paid to put $1 billion, have to integrate operations, and if it screws up, they can screw up their whole company. Okay, and so the risk appetite and the risk structure of a fund is superior. I think now the banks have gotten smart, that they realize that they were the weak link in the chain there, and so I don't think that you're going to have the debt markets come back in the same way. But you know, the strategics don't feel a need to kind of take the level of risk that the private equity firms are willing to take.
Okay, so we now understand how you get into the deals. Let's try to find out, once you're in a deal, how the entrepreneurs kind of enjoy the ride with private equity. I'd like to point the question to Lars. Lars, you have been venture capital funded with the foundation of Xing. Then we together did the IPO of Xing. I was your banker back then. A lot of people criticized that the IPO was early. Then you probably had a lot of discussions with the folks like TA Associates and many other private equity businesses, and in the end, you did a strategic deal. Congratulations. Tell us a little bit about your experience looking at IPO, strategic sell, and let's call it LBO or buyout or private equity.
I think in the last years I learned a lot. We had great business angels. We had venture capital. We didn't need it. And finally we took another round of financing, which is called IPO. IPO is not an exit, just a new beginning. It might be for some of you guys an exit, but definitely for the entrepreneur it is not an exit. Looking at the ride of public markets in the last 2 years, it always have been fun. And I can happily say that Zing is still the most successful IPO since 2006 in the category over 50 million euros. Looking at the opportunities I had as the largest shareholder in the recent months, we've got approached from everybody, from financial institutions, from strategic players, from the market players, from media houses, etc. And if you as an entrepreneur at some point think of selling your stake and go off to the next thing, you think, like, what is best for the customers? Because the customers actually brought you to the stage. What is best for the company? Where do you feel most comfortable with? Who are the people you like to work with together with the management team in the future? So, and in the end of this kind of little program, Boda got it. So it was not on price.
So, Oleg, what's your experience with private equity? I remember most of these firms, which tend to be a bit in the background, have been quite new to you. How has it, most of these private equity firms which try to operate often a bit in the background have been new. What's your experience with private equity money? Do you see the famous value add when you look back the kind of last year?
Up to now, I cannot complain, and I think at the end everything is a human relation, you know. So I don't know if you remember, I mean, because you were architect somehow, Mark, of this deal. But when we were running, I mean, the process, we saw a lot of people, and I told you, you know, after the first round, I mean, the person with whom we'll make the deal will be John Meeks, and it ended up being this. And so for now, I mean, I think everything is going, I mean, well.
Whoever has a joy to do with you the next deal should listen to you and stop all the other talks and just focus on John. So Simon, you have been in an interesting role, and what I really enjoyed about you, you're coming out of traditional media, traditional in a way, MTV, but you recently took on a job to be the chairman of Bigpoint, one of the fastest growing European internet businesses. And I don't know how I should, I think I see your job twofold. One, kind of being the connector between private equity and the entrepreneur. And on the other side, probably delivering some of the lessons learned from old media to new media. Tell us a little bit about your job and tell us about your experience with private equity and the value add.
I think I used to describe my job at MTV as adult supervision, and that was kind of what I did every day, was look after all the people who ran around and made the program and made the money. And in a way, that's kind of what I still do. That's not to say that I'm dealing with a bunch of children, not at all. It's actually just bringing the benefit of a degree of experience to some of these things. Is it the fact that I happen to have been in the traditional media business? Not particularly. It's more about the fact that I happen to have been involved in a business that scaled from tens of millions of dollars to almost $1 billion in 10 years. And I've seen that and seen how you do it. And part of, I think, working with a company when you're in the 10 to 50 million range is visualizing what it's like to be 10 times or 20 times larger is really difficult, because you can't imagine the people you'd need, the structures, the this, the that, and how many clients. It's just a very hard thing to visualize, and I know I've done it, and I couldn't, when I was that small, visualize what it would be like, and we turned into doing that. And part of that is about creating an organization, and one thing I tend to get involved with quite early on is how does this thing organize. And when I started with Bigpoint, I said, you know, the day you grow up is the day you hire your head of marketing, not because they know a lot about games, but because they know all about marketing. And that's kind of a very different approach to how you think about your business. It's no longer somebody necessarily who's passionate about your product. I mean, you'd like that too, but they happen to be professionally very good at what they do. So that's kind of, I mean, that's what I kind of come in and talk to them about, is I talk to entrepreneurs that I work with and try and help them to be ambitious about, you know, I like what Klaus was saying earlier about being ambitious to be much, much bigger, and how do we create really, really big European internet businesses. And I think part of that's about ambition. And it kind of saddens me sometimes the ambition is, you know, if I can get out in a year and make my money and retire, then I'm going to feel a hell of a lot better. I want to build some businesses that are really, really big and that we feel fantastic about. And part of that is about having ambition and confidence. And confidence is quite difficult. Let me ask the second part of your question, which is, what does private equity bring? Well, one of my private equity investors in Bigpoint is in the room, so obviously the answer is lots. And I think actually, to pick up an earlier point, I think that is also about confidence. And when I look at the old media companies who I still know quite well, and one of the things that surprises me is don't meet them in this kind of space. I don't meet them anywhere anymore. And I kind of wonder where they are. I mean, why are they not sitting here? Well, partly because A, as I said, a lot of people, they're kind of burning the furniture at home to try and keep warm. And B, they've lost their confidence because, they used to think they were the master of the universe. I did. And then they realized, we all realized we didn't really know anything about anything. The ad market fell apart and suddenly we didn't look so clever. And none of us really had a good solution for the future. I think a loss of confidence means that they're kind of not at the table. And that means a conversation with a private equity player when you're one of us is a lot easier to have because they kind of get it and they kind of share your ambition. And I think it's about ambition to build a big thing. The strategic thing is nice. I think the ambition thing is even better.
Index Ventures is known as, some people refer to the Sequoia of Europe. I think it's probably the one VC was one of the biggest home runs in the portfolio. You can talk about it yourself, but there are a couple of $1 billion, actually probably even €1 billion companies you created. We are at the end of 2009. Out of your portfolio, if you would bet, how much IPOs we will see happening next year out of Index Ventures?
So the number of IPO is always difficult. Probably we'll need some help from John to help us on that. But probably I would say in our portfolio we would have 4 or 5 companies IPO ready. So depending on how the market will go. So the point here, as John was saying, is it's very important. You building companies, you're building leaders in Europe or sometimes outside Europe. Without questioning too much the markets, but you have also to be ready to benefit from the market to help consolidate industries, as example. So it can be great accelerators. It's true that we need the markets to be able to do that. Otherwise, it will take a bit more time. So we need to be ready and grab the opportunities.
So John, how are the markets?
Well, they're changing every day, I guess. I don't think that people expected Dubai to launch the surprise that they launched just before the Thanksgiving weekend in the middle of last week. But taking a slightly longer perspective, obviously volatility has come down significantly. Markets are up very significantly over the last 12 months, and really since the bottom, which I think was reached at least in equity market terms in March. I think that the critical thing is that volatility has come down. That enables people to actually make decisions whether they want to access the capital market or not. Looking forward to the new issue calendar and in particular the tech IPO calendar, I would agree with Dom. I think that we're going to have a pretty full calendar in 2010. I think we already see a number of IPOs sort of more generally outside of the TMT space. Now in the fourth quarter, and I think that it's only going to accelerate into 2010. And if I were to guess, I would probably think that we get at least a dozen of tech IPOs, with an offering size of say more than 100 million next year. Very difficult to say. It could be 6, it could be more, but my own guess is that we're probably going to see 10 to 12 of those take place.
Will we see one this week?
Well, I think that hopefully, knocking on wood, touch the nearest wood that I can find, we're going to try to price the IPO of Untitled, which is an Italian e-commerce company, this evening. So let's see over the next few days if everything goes well.
Talking about pricing, and that's a question to the whole panel. Do you think the US is trading at a premium to European companies? And John, especially you, I used to have a very similar job when I went to see companies and pitch IPOs. The valuation question was always a challenge. And looking at European companies, it seems to be that there is a discount. Can you confirm that?
Well, this is one of my favorite topics that I debate with the friends and colleagues and clients. I think that the problem is that it's obviously pretty much impossible to actually prove in practice that there's a permanent discount or premium in one market or the other. I think that there's obviously a huge amount of anecdotal evidence, and I think that the conventional wisdom is probably that in certain sectors of the tech market you have more, you know, it's easier to get a premium in the US than in Europe. You know, I find it hard to believe we have completely global capital markets at the end of the day. You know, if there was such a thing, you know, it would be arbitraged away. So you know, it's difficult for me. I certainly wouldn't underwrite to anyone here that you can get a premium in one market or the other. But I should probably hand over the mic to my friend here on the left, who has also got views on this.
Well, I'm laughing because John and I are having this conversation on an ongoing basis. But you know, we have 3 of our European portfolio companies that are going to go public in next year, and they're all around the $100 million EBITDA size. So these are north of $1 billion valuation companies. One of those, Sophos, will go public in the US and not in Europe because of a conviction that TA has, and having tried in Europe and not gotten the valuation that we would have liked. We had a couple other IPOs I was involved with in 2007 in Globop and SmartStream, where the valuations we would have seen in the US were different from the UK. But on the other hand, I think if the markets get warm enough and you can have a global offering and it becomes a must-own stock, perhaps what John's saying is true. You know, there's not as developed of a hedge fund, small cap, mid cap, long short market. The markets aren't as liquid. But if you have a big enough company like an AVG or Jupiter Asset Management that will be $500 million size IPOs, we would expect those to have less of a valuation difference.
Does the Sophos management team needs to move to the US?
No, they don't. But it's, you know, you have to redo all the accounting for GAAP, and you have to do Sarbanes-Oxley. You got to go back several years. So that's an example of an investment where we're making to take a company public in the US, and it's an expensive proposition. And I know a number of the leading venture capital firms do try to set up their businesses such that they have more of a US bent, because every once in a while you can get these real outlier events in the US markets.
Like Open Table, for example.
Could never happen in Europe.